All right, viewers, there's another big breaking news that is coming in, and that is related to the Indian rupee. Now, Indian equities extend their decline on Friday in a volatile trading session as escalating geopolitical tensions in West Asia dampened investor risk appetite. Now, the Indian rupee opens down 0.5% at 92.19 per US dollar. Previous close was 91.74. Now, rupee plummets 43 paise to 92.25 against the US dollar in early trade. And that's not all, ladies and gentlemen. Sensex tumbles over 1,800 points in pre-opening session, Nifty below 23,900. Now, this amid tracking weak global cues after crude oil prices have surged more than $100 per barrel. They have surpassed the $100 per barrel mark amid escalating geopolitical tensions. Now, this is a very big development when it comes to the rupee, and the rupee has taken a hit. The Indian rupee opens down 0.5% at 92.19 per US dollar. Previous close was 91.74, and rupee plummets 43 paise to 92.25. All right, we have Pranav on phone line to explain this issue in detail. Pranav, what exactly was the cause of the rupee falling down? And also, the oil markets have been severely affected because of this ongoing tension in the West Asian region. Pranav, over to you.
Well, absolutely. In fact, the uncertainty over oil and energy supplies is primarily the reason behind the rupee, the plunge in the rupee, as well as in the markets. In fact, as you rightly said, oil prices jumped about 17%. So West Texas Intermediary, which is actually one of the main exchanges for oil as a commodity, has witnessed a 17% spike in oil for the first time in the past about 4 years, crossed the $100 mark. And these are the ripples of that is what is getting reflected across markets, be it the currency markets or the capital markets. As far as the rupee is concerned, the rupee is down primarily because of the uncertainty, and in effect, it will necessarily increase India's import bills. And that is, in fact, one of the reasons behind the fall in the markets today, which are down about over 2.5%, quite in line with its Asian peers. Over to you.
Yeah, definitely, Pranav. The other important question is about the oil prices, and they have surpassed the $100 per barrel mark. And also, there was a statement by a US senator that they will take over the Iranian oil just as they did in the case of Venezuela. Now, what does this really mean, and how severely will the oil prices be impacted in the future?
See, there are 2 or 3 things to look at. One is obviously the oil prices have been on the rise over the past about a week. Now, 1 or 2 sentences that or statements that kind of provided an early relief was one when Donald Trump said that the U.S. will be providing a security cover to those vessels that are passing through the Strait of Hormuz. That was one of the days when the oil prices actually kind of cooled down. Now, the second statement from the senator has definitely or clearly not provided a relief to the markets because oil prices are rising. Just to give you a perspective, over 40% of India's crude passes through this volatile Strait of Hormuz. So, we are looking at several stocks, several companies looking at disrupted supplies. And experts and analysts believe that a long-term conflict in this region could in fact bring down India's growth prospects as well. The GDP growth projections also could be affected for about 0.5% for every $10 rise in the crude oil prices. So that's the kind of impact that we're looking at if oil prices continue.
All right. Thanks a lot, Pranav, for putting this into perspective and for your in-depth analysis on what's going on in the markets as an impact of the West Asian war.